Yo, what's going on, guys? It's your boy, Tech Investing, back here with another video. We are going to be talking about NQ today and ES and my personal trading model. Not personal, but the one that I trade on this channel, the flagship trading model, is the ICT22 model. And something specifically, about this ICT22 model that I don't think a lot of people talk about, and I think is a really, really, really high probability setup. One of the highest probability setups for a 22 model. We'll get into that, but as always, we start off with a daily to a 1 minute time frame review of what's happened today, and then we'll go over the particular trades that happened today as well. Now, for those who are interested, you can press that like button. Thanks, appreciate you pressing that like button. It's really helpful to me, and it's basically a form of payment for watching this free video that's going to give you some awesome game. Also, you can press the subscribe button and press the notification bell so that you don't miss a single video where we do these daily NQ reviews. All right, so let's get straight into it here. And it's also I have a free Discord below as well. Feel free to get into that, and you can see my daily reports on bias and where I want price to go. It'll really help you be more accurate in your trading, and you also don't have to wait till the end of the day to see the trades that I took. You can actually view them live, as well as ask me any questions. So let's get into it. On the daily time frame, ignore this candle right here. On the daily time frame, we had an expansion day today, right? And I've been saying it for a while now. I want to see NQ go higher. We're in an election year, right? We're about to swap presidencies. Usually when that happens, right, no president wants to end off with a bearish, equity market. You want to be able to say that, yeah, look what I did for the American economy, right? So I want to see price head higher going into the end of the year. Look how we reacted off of this weekly SIBI, by the way, as well, and this daily SIBIs. We've basically ran through it, and you could have easily known that was going to happen too, because ES did that a while ago, and so NQ has been catching up, playing his six sister vibes. You can see we took out the all-time high pretty early today, actually, and the previous day high. You can see we spent a little amount of time in the previous day's range, right, and we just expanded higher. Now I'll go over how you could have anticipated. This is going to be a pretty expansive candle. I mean, look at how much we pretty much just a lot of these heavy bodies heading towards this all-time high. If I wanted price to basically reverse, I would like to see maybe this candle wick this high and then come lower. But, this order flow is basically, showing me that we're pretty bullish, and plus ES, we're catching up to ES. It's already done that a while ago. So I'm anticipating NQ to run this high, right? That's one of the reasons why I wanted to see an expansive day where we're just exploding over the all-time high, not teetering around it. On the 4 hour, we pretty much just been going up since yesterday morning. There's not really much to say here. Price has just been going up. One thing that I did see in the morning that would have also helped me to recognize that price was still going higher. When we came into that 10 o'clock hour, we did come lower and have a retracement into this 4 hour BISI on ES. And then we wicked higher and rejected from it and kept going higher. So for me on NQ, I thought that we were lucky to continue higher as well for the day, because you can use ES as a supplement, given that they're both equity futures. With similar stocks in the profile, even though they do have different stuff as well. On the 1 hour, what do we have? We consolidated around the previous day high, around Asian on Tuesday yesterday, but continue to make higher highs and respecting bullish order flow, right? And then coming into the 9:30 open, we did have a bearish order block that formed here, right? But this was a Judas swing coming back into I guess just this balance price range over here, and then really wicking higher and rejecting higher. And for me, that would have also, especially if I'm looking at this candle forming on a 1 hour, we're really just respecting this bullish order block right here. We're not able to close through this down candle, so I'm also telling me that, okay, we're probably going to be bullish for the rest of the AM session, and on the shorter time frames I'm going to be looking for longs, right? So you also want to have this 1 hour, 4 hour daily candles on your chart. You can see about 11 a.m. we make this high, and then we start teetering around. Very classic of if you've had a move from 9 to 10 a.m. A lot of times 11 a.m. can just consolidate for a while, and then the lunch hour can kick off pretty early, and you just consolidate for a while, and then you continue to expand in the PM, which is exactly what we did here. We did have SMT with ES at this point, with ES making higher highs. Yeah, relative to this candle right here, ES was making higher highs, but NQ was making lower highs. And you'll see it's a little bit more prominent on the 15-minute, so we'll go over that there. So I was anticipating price to possibly come back lower if we can close through this wick really right here. on the 1 p.m. if we can close through this 1 hour wick, which is why you see this 50% constant encroachment. But we did not. We continue to stay in the upper half of this wick, and wicks tend to act like gaps, right? So if you're staying in the upper half of a gap, that is telling you that we are likely to go higher, right? If you're closing like this in the upper half of it. That's what I talk about on this channel all the time. And then price expands going to the 2 p.m. hour after a consolidated lunch session and taking out the lunch low. And then we make the high of the day in that 3 to 4 p.m. hour. Very classic of a bullish daily profile, right? Where you take out the lunch low going into PM and then you continue higher, right? Especially if you are bullish, which we already anticipated we were going to be for the day, given that 4-hour price action on ES, where we fill that 4-hour busy, right? And so on the 15-minute, what do we have here? Now we're going to talk about something that I really, really love in a second. But on the 15-minute, on this all-time high, right? We came back into it on 1 a.m. and we're tapping on the top of it, but we continue to rise higher, right, during London. Okay. Now coming into the 9:30 open, right, we didn't have much movement during pre-market. You can see there's not really that much volume. Pre-open, you see most of the volume is in the daily, most of the day. So you like to see that coming into the day. I'm like, okay, we're probably going to be fine for the AM and PM price action. But we did have this large swing downwards, taking out these relatively equal lows, which is really a play going into 9:30 to say, hey, I want to continue higher, but I need to take out some liquidity to continue that move, right? And IC talks about that a lot. Like to continue a move that you've seen overnight, sometimes you need to see either SMT or a short-term purge on liquidity, right? And so you see that happen here. It's 9:30 open. We purge these lows, right? Make that more obvious. It's 9:30 open. We purge these lows right here. And we are staying clearly in the upper half of this opening range gap, not showing a willingness to get to the constant encroachment, which tells me that today could be a large expansive day, right? And so you can see from here to here, it moved about 150 points, right? That to me is not shocking, especially given that we did not have a willingness to come back to constant encroachment. Constant encroachment's opening range gap can typically be filled, about 30 minutes going into the session. But that did not happen. So we get and make this high around 11 a.m. Then we consolidate, right, until about 1:30, where we have a short-term purchase liquidity below these lows, and then we continue higher. Now, this is where we start to talk about my favorite, one of the most high probability setups that you will ever see. Okay. Now, a lot of times you could see price starting to range when you're seeing price consolidate. Focus on what's happening, right? Like we're seeing that there's a high here, low, lower high, lower low, lower high, right? So this is what we call a wedge. So when you see a wedge forming, a lot of times you'll see price action take out one side of the wedge and then go to the other side of the wedge. So to me, it is very obvious that price is going to take out this buy side, especially when it took out this sell side first, and we have this nice rejection wick candle on the 15-minute. So on the lower time frame, this actually was a 22 model forming here off a PD array, which was a 5-minute SIBI that was here early in the morning, and which is actually a 5-minute inversion fair value gap, which we're going to go over. But one thing I want you to stay focused on is that if you see a wedge forming, right, focus on what side we take out first, and then try to find a buy or a sell in the opposite direction if we react from a PD array or you have a clear break of market structure to the upside, right? So you can see that is what happened here. I had this black box here because you can see we traded to the constant encroachment of this particular CE of the 15-minute wick, and that was also confident to me that we're going to continue higher. And we did have this SMT with ES over here, but because of the daily profile and the fact that we left this opening range gap open and we did not show a willingness going into 132, you trace into the daily move, but instead we took out the side and then retraced. We took out the lunch low and then retraced higher on a wick candle like this, which is really a rejection block. I'm pretty confident now that this SMT is not valid, right? I want to see follow through on the SMT. I don't want to see it teetering around. So it continues to go higher, okay? Now on the 5-minute, what do we have? Opening range gap. We came into it a little bit, went higher and touched this 5-minute SIBI. And then we had a bearish order block that formed lower, but we found support on top of this opening range gap high. Actually, it took a 22 model short scalp right here. Made a quick profit. I'll go over that on the 1-minute. And then price went higher, tagging this, closing above this 5-minute SIBI, but purchasing liquidity here above this 9 a.m. high, and then closing back in it. And then closing back below this high. So that's some pretty bearish price action, which is why we had a pretty deep retracement into this 5-minute fair value gap, right? Completely overlapping it, touching that opening range gap one more time at 10:15 a.m. and then coming back above this 5-minute SIBI where we went higher for the morning. By about 10:30, start to consolidate, right? After we've taken out a lot of highs, major high, this high as well. We start to teeter around. We form a rejection block above here and then invert this 5-minute BISI, right? At around 11:15, and then retrace, going into the morning or going into the afternoon, about going to this lunch hour. So sometimes after 11 o'clock, you can see this kind of like retracement. Typically happens 11:30 to 1:30. Like that's the lunch hour, lunch, couple hours. Like lunch can happen anytime between then. But sometimes I've noticed that if I see this move happening like after 11 a.m., like 11:30 and after 11:30, you can see a opposite move. Like you see, like if this happens, especially if you're bullish and you see this move happen after 11 a.m., you can start to see a move like this after 11:30, where we can actually retrace the most recent move, right? So you see that happening. And so I actually took a long down here, but I ended up getting break even right here. I'll go over that trade as well. But then we started to teeter around basically until about 1:30, where we now broke market structure and then, close above the lunch high after tapping this 5-minute SIBI right here, right? Inversion Fair Value Gap, and then running higher, taking out this series of highs and then eventually this high, and then these relatively equal highs above here at about 215, and then continue to teeter higher until we made the high of the day around 350, and then 350 to 410 macro, we retrace some of that range. Okay. Now, on the 1 minute, let's go over some interesting stuff, right? So on the 1 minute, we had starting at 9:30, coming back into this opening range gap, a lot of trash price action. I don't see anything clean until about 9:50, right? Where we are hitting this 5-minute SIBI that formed over here, purging this high and this high, breaking market structure, fair value gap. Now that's the 22 model, right? So 22 model is when you have a high like this, low, higher high, right? So that's the purge above this high and a purge above this high. Then a break of market structure lower below this low, right? And you need to have a fair value gap. Look at this gap. We retrace back to that fair value gap, which was my entry, and my stop loss was above this breaker. And then we ran lower. We took out this low. And because I saw SMT forming with ES right here, I actually pulled out early and, just took a nice 1 to 1.5 R. And plus, I was still, I was thinking that, we're not really showing a willingness to go down here to this constant encroachment. Yeah, and we especially didn't do it within the first 30 minutes. I'm thinking it's possible because we're also bullish on daily profile that we might just leave a portion that's open and continue higher, which we did. Price ran higher at about 10 a.m. Wicked above this high, came back lower right after wicking above this high. Right, notice how we wick, and when you wick like that, look at how we're respecting this rejection block now. We come back and tap the constant encroachment and then run lower from a bearish order block, right? So I'm thinking now we can have some pretty decent retracement. We come back below this 5-minute SIBI again, return back to opening range gap at 10:16 one more time, and then run higher, consolidate for a little while inside this 1-minute rejection block wick once we get there. But then at 10:30, we were able to expand higher through it, right? And then by 10:38, we've made the high for for at least that morning at this point, and then we consolidate for a while, and then we form another high here at the 10:10 the 10:50 to 11:10 macro. But then do not take out this high with that high, and we run lower, right? So this is really a mitigation block right here. This becomes a mitigation block right here, and price retraces back to this fair value gap, just a little bit, and runs lower. I would have taken this 22 model if this high had taken out this high, but that's not 22 model because this high did not purge it. So I just have to tape watch, but I had a feeling it would go lower, especially now that it's 11 a.m. and we're at such a deep premium. Price runs lower, comes back into this 1-minute SIBI again, runs lower, fills this 15-minute fair value gap. This is what these two blue lines are. And then going into the 11:50 macro, we have a low here, lower low, so purchase liquidity. We have all these LRRs plus these relatively equal highs. We have a break of market structure above this high right here, and we have a fair value gap. So my entry, right, at this point, once this fair value gap presents itself, once this fair value gap is formed, right, and this candle starts to expand away, my entry is now going to be at this high. Sorry. My entry was at that high, and my stop loss is below this breaker's low, okay? Plus this candle's low. So I actually did it below the close of the candle of this FVG, right? whichever one is lower than the breaker, because you have this breaker, you have this, fair value gap, plus you have this wick, like, that's 3 PD arrays. I don't want to see price go below here. And I'm aiming for this high right here. Now that's a nice 1 to 4. And price runs higher. And, once you get above this 1 minute CIVI, I've taken some partials. Once you get above these relative equal highs, I've taken some partials here just to take something off. Plus, we teeter around for too long. You can see that, actually, I lied. My entry was a little late. So I got in somewhere like around here. And, but I would have loved to enter here. If I did, I, wouldn't have gotten stopped out so early. But here at this 1221 candle, starting at 1220 to 1240 macro, like price just starts spiking lower, right? And I got stopped at break even. I took some off, but so I was up like 0.2 R. And then it immediately reversed, came back and touched this former 1 minute wick, right? From here at 11 a.m. And then it expanded lower again. And that's not surprising to me. We're in the lunch hour. We could just consolidate. And you see another 22 model forming here with this low, high, lower low, breaker market structure for value gap, enter at this high of this breaker, runs higher. So that could have been another entry right there. Stop is below that breaker. You can aim for this high plus the other highs as well. You don't get that again as well. I would have taken up some partials maybe at this CIVI right here. And, I would have got stopped break even. That's okay. It's lunchtime still. And plus, now we're not heading into the 1 to 1:30 p.m. Judas swing, right? Which is where you can see price acting kind of like the opening range of the 9:30s. This is the opening range of the PM session. Price starts to Judas swing lower, taking out this side of the wedge now. And remember, we talked about in the 15-minute. And this was my sweet bread and butter trade of the day. Low, lower low, and breaking market structure right here above this high. Fair value gap. I entered at this fair value gap. My stop was below. This breaker is low, plus this candle's low right here. Plus we had this inversion fair value gap, which you can see we retraced all the way down to. Why did we retrace so heavily? Look at this 1 minute CIVI right here. We can't get past that. We have a strong rejection candle lower. So I'm thinking that we can get this fair value gap filled pretty aggressively. So honestly, when I see this, I could probably set my entry to below maybe this fair value gap right here. And we ended up getting that. So I could have got a better R to R and still place my stop below this breaker or below this candle right here. But that's okay. I was, moving pretty fast and I didn't want to play around. So it's after 1:30, we start to rise higher. We come back to that rejection block right there. And then we have a really, really fast return lower when, this is like around the time that Powell was speaking. And then we immediately rejected higher and then and I hit my take profit above here at about 218, and the price continued higher for the rest of the day. So that has been one of my best bread and butter setups for the ICT22 model. When you see a wedge forming, it's goated. And if you like what you hear so far, press the like button. Press the subscribe button as well to get the notification daily. And yeah, leave a comment below if you learned anything or you have any questions. And I'll see you guys in the next video.